Welcome to today's session, right? So we'll be talking about reversals in the market, and we said that we have three zones that we are to expect reversals from, right? Your support level, your resistance level, and your Fibonacci level. So last time we talked about reversals happening at support level and resistance level. Now, what do we mean by reversal happening at a Fibonacci level? How can you draw Fibonacci level, and how can you use Fibonacci level to your own advantage, right? So let's look at what's meant by Fibonacci level. Now, if you want to get your Fibonacci level or two, all you have to do is to tap on this top left hand corner of my screen. You will see that there is a tool known as Gann and Fibonacci tools. Gann and Fibonacci tools. So all I have to do is to click on it, and you can see there are a lot of Fibonacci tools right here, but it's only just one we need, which is the Fib retracement. What we need is what? The Fib retracement, and it has a 4 lines attached to it. So now that you're actually using the Fibonacci tool, right? The Fib retracement. So all I have to do is to click on it and drag it, right? So let me explain something before I talk about Fibonacci, right? So normally we know that market structure will move in higher highs and higher lows, right? So what the Fibonacci retracement tool actually means? It actually means you catching the retracement of a move of a buy or a sell trade, right? So market will reverse from a higher high, gets to a higher low, and start buying. So how do you know that market is actually going to buy? Because I believe we have not asked that question. Because I've been saying that market will get to higher high, higher low in a bullish trend, right? But how do we know that market is going to buy at our higher low? Because definitely this is where we should be looking to buy, right? This is our higher high and higher low structure, and the market should come here, we should be looking for buy opportunity, right? But how do we know that market is going to reverse from here and buy, or market will not just break this zone? How do we know? That is where the knowledge of Fibonacci tool actually comes in. Now, what do I do to catch this buy right here? It's simple. All I need to do right before this buy will happen, let's say I came to meet the market, analyze the market, and I came to meet market dancing around this zone, right? So all I have to do is to bring up my Fibonacci tool, which I got from here, and look at something. You will see that there are figures on my Fibonacci tool. We have the 0, 0.236, 0.382, 0.5, 0.618, and 0.786. Now, this one that are in brackets, don't mind those numbers there. The numbers are in bracket, don't mind those numbers. So if market should move from 0 to 1, which means your high should be at 0, then your low should be at what? The 1. So which means I will carry my 2 and put my 0 at the high, then my 1 at the low, which means that if market should retrace to the down zone, any of this zone, I should expect what? A push what? To the upside. Now, in Fibonacci retracement tools, there are 3 zones that you should be looking at to trade from. There are 3 golden zones. I actually love to call them golden zones because these 3 zones are very important, or 3 numbers, right? Because remember, I have 0, which is here. You have 0.236, 0.382, 0.5, 0.618, and 0.786. Now, the 3 golden zones are 0.5, 0.618, and 0.786. Now, if you go your MT5, right? If you go to your MT5 platform, you will see this as 50%, 61.8%, and 78.6%. But if you are using the TradingView platform, which you ought to be using, it's going to come out in this platform or in this way, in decimal figures. Now, the 3 zones are your 0.5%, your 0.618%, and your 0.786%. Now, these three golden areas or figures are those numbers you should be paying attention to that market will always reverse from. So if market should get to the 0.5 and does not reverse, then you wait for it to get to the 61.8 level and expect a reversal from there. You understand? If market does not respect 61.8 level, then mark out 78.6 for a potential what buy. So market must respect either 0.786, 0.618 or 0.5. Take note, right? 0.5, 0.618 and 0.786. Now you have to draw your Fibonacci tool very well. First of all, this is how I drew it, right? Remember, this is my high. This is my high right here, my higher high, and this is my what? My higher low. Now I have to ensure that the recent, sorry, this is my, I will have to use this one right here. This higher low is what I'm interested in. This one right here. So first of all, my Fibonacci drawing tool, right, I will have to connect this high to this low, the recent high and the recent low. Before this buy actually happened, right? Before the buy actually happened, I will have to connect my recent high and my recent was low. Now take note, my 0% will be on my high and my 1% will be at my what? Higher low. On your MT5 platform, you will see it as 0% and 100%. But on your TradingView platform, you see it as 0 and you see it as 1. You can actually go to your TradingView platform and you see what I'm talking about, right? On your MT5 platform, you see what I'm talking about. Now, on your higher high is where you put your 0% and your higher low is where you put your 1%. Ensure that they actually match, like the high or the line of the 0%, especially on your high. Then the line of your 1 is at your higher low, right? So with that knowledge in mind, or since I've drawn my Fibonacci tool very well, all I have to do is to what? Come to the chart and wait for market to actually reverse from either the 0.5%, 0.618% or 0.786%, and I expect what? A reversal to the what? To the upside. Now let's imagine we are in a sell scenario, but that's for the buy scenario. If we're on the sell scenario, is replica of what I just did. Right, so we have lower low, lower high, lower low, lower high right here. So before I will catch this sell, right, all I have to do is to actually mark out my Fibonacci tool, connect my recent lower high and my recent lower low. So this is my recent lower high and lower low. So all I have to do is to draw it down right here. Right? So which means, since I want to turn it the other way, right? So my 1 will be at my higher, at my lower high. Take notes, my 1 will be at my lower high. Then my 0 will be at my where? My lower low. Take note. So if market should come to either of these 0.5, 0.618 or 0.786, I should what? Expect a reversal and market should what? Market should sell. Now this is what happens when you see the market moving in higher high and higher low structure, or lower lows and lower high structure, right? Because before the sale of the lower high will happen, because definitely I said that we ought to be buying the market, we ought to be selling the market when the market is high, right? We buy when the market is low and we sell when the market is high. Now we have a retracement of a lower high, right? How do we catch that retracement? How do we short the market of that lower high? It's simple, by using what? A Fibonacci retracement tool, catching it at the 3 golden levels, either at the 0.5 level, 0.618 level, or 0.786 level. So either of these zones, the market is going to what? Respect. So now let's go to the chart right now and let's see for ourselves how market actually followed structure and followed this lower high and lower low fib retracement tool, and now I can use it to cash my own trade. Now this is a pair on GBP USD. From what I just analyzed, right? First of all, you can acknowledge that this is a bearish trend. The trend is downtrend because it's making lower lows, lower highs, lower lows, lower highs, right? So with that in view or with that in mind, I can tell that okay, market is bearish. But how do I catch my sell opportunity? Because I cannot be buying in a bearish trend, right? I cannot be selling in a bullish trend because the trend is my friend, the trend is my guide. So what do I do? If I want to catch a trade like this, let's say before this sale happened, this sale you are seeing right here, before this sale happened, let me remove this tool. Before I would have caught this sale, what would I have done to actually caught this sale? So let's say I came to the market and I analyzed and I noticed that the market pushed up, right? The market pushed up and the market will likely sell based on the structure that I'm seeing, right? All I have to do is simple. I'm going to connect my recent high to my recent low. Now look at me marking my recent high. This is my recent high right here. This is my recent high and this is my recent low. This is my recent high and this is my recent low. So what I have to do is to bring out my Fibonacci tool. I'll go to my Gann and Fibonacci tool, click on Fib retracement, right? Then connect it from the up to the down. From the up to the down. And if I connect it from the up to the down, what will happen? You can see that market is actually respecting the 0.618 level. That's 61.8 fib level retracement, because you can see that when market actually went to the 61.8 level, what happened? It sold. So if I want to catch this lower high trade, what will I do? I'll put my stop loss, enter here, put my stop loss above this high, then target the sell to the downside. Now you can see that Fibonacci actually works in line with structure, in line with lower lows, lower highs, higher lows. That's how the Fibonacci actually works. You cannot be drawing Fibonacci at a support level, no. There must be a lower low and lower high for you to connect to Fibonacci level. There must be a high, a recent high and a recent low. So all you have to do is to first of all locate your recent high, locate your recent low, as simple as that. Then bring that to Fibonacci to ensure that one of the Fibonacci and the zero of the are at your recent high and recent low. So the one will be at the high, the zero will be at the low. For a sell opportunity, for a buy opportunity, the zero will be at the high and the one will be at the low. So since that is in mind, I can know that okay, since market I've drawn my Fibonacci very well, all I have to do is to wait for the market to retrace to either of my 0.5 level, 0.618 level, or 0.78786 level. So fortunately for me, the market came to test where my 0.618 level. That's when the market actually came to respect. And you can see that when market came there, it gave some nice bearish confirmation and what dump to the downside. So let's look at another example again, right? Fibonacci is very, very easy. It's a very good tool to actually use trading, right? So let's look at a pair on USD CHF, right? Let's look at USD CHF for a bullish structure. Now look at it closely. How would I have caught this buy? It's simple, right? So first of all, I have established that we have a bullish structure right here. We have this is the 4 hours time frame. Take note, this is where I do my analysis most of the time. So you may do your analysis on the daily time frame or staying the same 4 hours or 1 hour time frame. So all I have to do is to connect this my high. I have to identify what's the structure first of all. So since I know that the market is in a bullish structure, higher high, higher low, higher high, right? higher low, right? I've identified that the structure is actually bullish, right? So how do I catch this buy opportunity right here? How do I catch this buy opportunity right here? That's this buy all the way up, because market has to come low for me to buy the market, right? So how do I catch it? Since I've already established that the trend is actually bullish, higher high, higher low, higher high. So which means a higher low is going to be formed based on the structure. So all I have to do is to connect my recent high and my recent low. So where is my recent high? My recent high is this high right here, and my recent low is this one right here. Right, you can see it clearly, right? I want to catch this buy trade, this one right here. I want to catch this buy trade. But how would I have catch this buy trade with Fibonacci? That's what I'm explaining. So your focus should be on how to catch this buy trade with a Fibonacci retracement tool. You understand? So with that knowledge in mind, I've identified the structure already, and I've marked out my recent high and my recent low. So all I have to do is simply bring out my Fibonacci retracement tool, draw my zero. My zero will be at the high. I will start from the bottom to the up, right? So from the bottom right here, I'm going to drag it all the way to the up, right? So when you draw your Fibonacci tool, be careful. Your 0% has to be at your high. Take note, your 0% has to be at your what? At your high. Then your 1%, which is the lowest, has to be at your what? Low. And you have to use the wick of the candle for precise or for more better accurate results. Take note, you have to what? Use the wick of the candlestick for more better results. So are you guys following what I'm saying? Okay. Now the 0% will be at the high, the 1% will be at the low. And I have to ensure that for me to get a precise result, I have to ensure that the line of my 0% of the Fibonacci tool is at the wick. So you can see, I didn't draw my Fibonacci level here, my 1%. I didn't bring my 1% here. I brought my 1% at the what? The wick of the candle of my low, and my 0% is at my high. So I brought my 0% at my high. I did not bring the 0% here. No, I brought it at my recent high. So the recent high is where you should put your Fibonacci. So it must be at the wick. You can see at the wick of this candle. At the wick. I didn't draw it up here. I didn't draw it here. I draw it at the wick of the candle. So take note. So with that in mind, right? So I know that okay, we have our 0% and 1%. So I have to connect and see where market will actually retrace from and reverse from, right? So when I did my findings, I saw that okay, market came and tapped into the 0.5% level. Now there's a trick for this thing. It's either market respect my 0.5 level, my 0.61.8 level, or my 0.78.6 level. Either of these three zones. So I will first check if my 0.5 level will be respected. If market disrespects it, then I know that's going for my 61.8 level. If my 61.8 level gets disrespected, then I know that the 0.786 is the last zone that market should buy from or sell from. But if market gets there and disrespected, then I know that my analysis or structure has shifted to a bullish structure to a bearish structure, or my bearish structure to a bullish structure. So with that in mind, I know that market came to tap into the 0.5 level. As you can see right here, market came to tap into the 0.5 level. You can see this is the 0.5. Let me make it more clearer. This is the 0.5 level. Now it's a measurement tool. The measurement tool. So my 1% is at my what? The low. So this is the 0.5 level. You can see, watch where this arrow is pointing. My arrow is pointing at the 0.5 level. So I'm going to trace it. I'm going to trace it. 0.5 level was the zone market respected. You can see, if market wanted to respect 0.618 level, then it's going to come to this 0.618 level. If they don't respect, it's going to come to the 0.786 level. But fortunately, the market came to respect was the 0.5 level. And you can see that when market came there, what happened? It bought. And you can see how market rejected off that 0.5 level. It's kind of like as if there's a support level there the market is actually reacting from, right? So first of all, look at it closely. You actually have a support level at that zone. So there's something we call confluence in market trading. There's something we call confluence. So first of all, market is respecting this support level right here. Support level respected number 1. And number 2, we have a Fibonacci retracement of 50% or 0.5 level. So these two zones are the two zones market is looking towards buy from, right? Number 1 confluence is that we have a 0.5 level and a support level. The number 3 confluence would be how the candlestick will react at that zone. So in trading, your point of interest will have to be confluence. There have to be confirmation. What are the 3 things you need to see before you enter a trade? And that is these things I just mentioned: your support level, resistance level, your Fibonacci level. The 3 things you need, right, in line with the structure. Although there are other things you also learn that will make you to have other confluence. But as a trader, you need to understand that these Fibonacci tools are one of the tools you can actually use as your added confluence. I can decide to trade and not use Fibonacci, and based on my analysis, right, all of us will still catch the buy. You understand? I will catch my own buy, you will catch your own buy. But based on how you can interpret your own. Me, I can interpret my own and say that okay, I have support level here, and I'm going to leave the support level to buy market and the structure. But you can come now and show me that okay, you are not buying only because of support level, you are buying because there is a fib retracement level of 0.5%. And the way the candlestick reacts will tell you that market is about to buy. So this is how to actually trade Fibonacci then.